just over 30 minutes ago, investors got their hands on the August Producer Price Index, providing a fresh insight into how much inflation is affecting wholesale prices. These are the prices that businesses pay. According to the data and the BLS, wholesale prices came in noticeably weaker than expected. Headline PPI fell by 0.1% month on month. Economists expected a gain of 0.3%. Meanwhile, year over year, headline wholesale prices rose 2.6%, and economists estimated an increase of 3.3%, which does exclude the more volatile food and energy sectors. That also was below economists' estimates. We want inflation to head down. We've seen inflation above that 2% long-term target by the Fed for some years now. But joining me now to break down this data and why it's important is NYSE Senior Market Strategist Michael Reinking. Michael, it's great to have you on the show this morning. So much to talk about, but let's start with your reaction to the PPI numbers.
Yeah, morning, Kristen. Thanks. Yeah, exciting day here at the exchange. Look, so the PPI data came in better than expected. You know, you kind of just ran through some of those numbers with a 0.1% decline. You know, the other thing to note is that we saw a negative revisions to last month's numbers. So we had an upside surprise last month. Those numbers were revised lower. Now, the big driver of this PPI decline was margins, right? So if you look at the final demand for trade services, it was down 1.7%. That was after big upside surprises in July and May, right? So you reversed a lot of that. And so you've seen a pretty positive, kind of but muted market reaction, right? This data comes on the heels of yesterday's, negative revisions from the BLS in terms of the employment numbers, and it once again it kind of cements the Federal Reserve's path of rate cuts as we move forward, with markets kind of still expecting kind of a 25 basis point cut. Yeah. But we do have a very big piece of inflation data out tomorrow with CPI.
Okay, so explain this to us, Michael. You are our resident expert. You've seen a lot of these data points over the many years that you've been here at the exchange and doing your job. The expectation was that inflation was going to move higher due to tariffs. So what is going on as we now see it move lower?
Right. So, look, there's a piece of this, right? Everybody's trying to understand what the impact of tariffs will be. Companies did a very good job in sort of pulling forward their demand, right? Kind of increasing inventories, right? So there's an argument to be made that we're still kind of working through that portion of the demand picture. Now, the other side of the equation is the services side, right? And that's not as impacted by tariffs, right? And we're seeing kind of the housing market and home prices and things, kind of within services, offsetting some of those goods, some of that good side demand, the good side inflation. The big question for the Federal Reserve right now is really around the labor market, right? And we've seen, a pretty significant cooling of the labor market, but we have the shift in border policy here, right, which is changed the immigration, is really kind of creating this dynamic where you have a shrinking supply of labor in the labor force and shrinking demand in the labor force. So it's a little bit hard to understand where that kind of the equilibrium point is in terms of the labor market. Yeah. And that's what the Federal Reserve is really focused on right now.
Yeah, so the S&P 500 set to open higher by about 0.5 percentage point. It seems like obviously traders like this data. It does signal, as you referenced earlier, that the Fed rate cuts do remain intact, at least one cut here at the September meeting. Is it a jumbo cut, or do they stick to 25 basis points?
Look, I think this Federal Reserve has, kind of not wanted to surprise markets. They've told us that 25 basis points is what's is what they're kind of expecting. If we get a very big downward surprise in tomorrow's CPI report, like we did today, that may kind of spark the conversation around a bigger, a 50 basis point cut in September. I think what it really does, though, is cement the idea that we're going to have a cut in September, October, and then December meetings, right? So 75 basis points through the remainder of the year. We could potentially get to 100 basis points. One thing to just note in terms of, you just pointed out the S&P 500 is up about 0.5%. 2/3 of that increase comes from Oracle alone. So Oracle, after earnings last night, is up over 30%, right? So 20 of those 30 plus S&P points come directly from Oracle. So it's not a full read on the inflation data.
I'm glad that you point that out, Michael. And what more should we know about Oracle as that stock is ripping pre-market?
Yeah, so Oracle, the actual earnings numbers were a little bit of a miss, but what they did is they took up their booking numbers by a massive amount. Kind of just highlighting the continued demand for AI cloud infrastructure. They were showing over 400% kind of growth rates, signing kind of $100 billion contracts, right? Kind of looking forward to next year. Now that comes on the heels of an announcement yesterday by Nebius that they were doing a deal with Microsoft that could be valued at over $20 billion for AI computing power kind of through 2030, right? So what this is doing is putting a bid back into that AI complex. It comes after strong earnings from Avago last week or Broadcom. Right, and it's kind of once again shining a light on just how much spending is happening and what a key driver of even economic activity that all of this the AI.
I want to do a little tease, Michael. We just have about 50 seconds left, but our viewers can probably see the Klarna signage behind us, right?
Yes.
How could you miss it? The pink has taken over Wall Street, my favorite kind of day. What does this say about the deal making that we see? What does that say about market conviction?
Yeah, so look, I mean, the deal priced above the range. It's a $1 billion raise, right? This is the most recent kind of large IPO. It's our 40th IPO here at the New York Stock Exchange this year, right?
40.
So
nice.
you continue to see kind of very strong demand in the secondary market, kind of for these companies, and it tells you that you have a very strong pipeline as we continue to move, kind of through the end of this year.
All right, Michael Renking, senior market strategist for the New York Stock Exchange. He's going to rejoin me after the market opens. We can talk a little bit more about Klarna. Michael, thank you as always.
Thanks for having me.